Hi everyone. Um, Good morning, good afternoon, good evening, wherever you are. All right, just testing to see if everyone can see and hear me clearly. All right. Happy New Year. Happy New Year. Happy New Year to you guys, wherever you guys are tuning in from. Yeah, Milu, nice to see you again, man. All right, thanks for tuning in to our first first pre-market session of the year. Yeah, pretty exciting session, right? Yeah, it'll be a pretty exciting session, right? Okay, just testing. Is everyone able to hear and see me clearly? Hey, Raza, nice to see you. Right, you got DJ Boyzaro here. All right, good stuff. We got Ernst Moss. Welcome, my usual crew. Right, good to see you guys again. Okay, right. Just let me just move myself. I think I used to be at the corner. Okay, I'll just adjust myself a bit later. Okay. All right. So let's begin today's session. All right, guys. Welcome back to another pre-market analysis where we look at what's coming up for the week ahead. Right. So we had our last one about 3 weeks ago. Right. I was supposed to fly to Adelaide, Australia, in Australia. I was supposed to fly to Adelaide in the last week of the year, all right, with my kid, right? But sadly, he went down with he got pneumonia, right? So the doctor advised us to like cancel the trip, right? So didn't manage to fly down to Adelaide, right? At the same time, it means like anyone was hoping to catch over there, right? Or any other suggestions that you guys sent, I wasn't able to do it, right? But yeah, he's on the mend, right? Recovering quite well. But yeah, I wasn't able to travel down in the last week of the year, all right? Hey, Chris, nice to see you here, man. Okay, all right. We've got Nwenya again. Nice to see you. Thanks for tuning in. All right, so let's begin today's session. Roy, yeah, Roy, thanks for tuning in too. Okay, let's begin today's session. All right. The usual, remember, guys, disclaimer: everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. Okay, new year, new, I believe, new targets that you guys have, right? And I will spend some time rehashing and answering questions that maybe if you guys have questions on like trading targets, trading journals, right? What are realistic targets to use, or you need any refresher, let me know, right? I'll do my best to get to them, right? On top of the usual analysis that we'll be going through, right? Okay, nice to see you, right? We got our usual cat over here. A little indicator is back here again. It keeps walking in front of the screen. Okay, Bitcoin and Ethereum, right? I'll take a look at them later. I'll take a look at them later. Okay. And pound dollar analysis, sure thing. Okay, right. Our usual style, we've got the key news events, right? Which I'll be focusing less on because I'll be diving straight into the charts, right? The analysis on the majors and the custom requests, right? So we already have requests for pound dollar. We have requests for Bitcoin and Ethereum, right? Let's take a look at all of them. And for those of you guys who are attending for the first time or might be watching this on replay for the first time and you're wondering who's this guy over here, right? My name is introducing your host rather. Right, my name is Desmond Leong. So I run the award-winning research firm Everest Fortune Group and also Forex Army. Right, we're finalists for 2019, 2020, and 2021 for best FX and best equity research. Right, prop firm trader, but more in the sense that pass on those recent tests that is going around. And the interesting thing is that if you apply everything that I share with you in this daily analysis, you analyze the approach that I take to trading, you analyze the approach I take to analyzing the charts, that is enough to pass the test, right? I actually passed there's phase 1, phase 2. I think phase 1 I passed it in 2 days, right? just based on our daily analysis. But that week had a little bit more setups, right? But you know our hit rate. For those of you guys who have hung around here for a while, our hit rate's about 70% most of the time, right? So it's pretty easy to pass this kind of test. Okay. Yeah. And yes, my cat keeps getting fat. Right. So back to this, right? We usually work with many major financial institutions to tell them where the markets are heading, but we have a special partnership with IC Markets where we bring you guys the good stuff, the juicy stuff, the stuff that will take a trading to a next level. All right. Yes, my cat is getting fat, man. He's just eating too much. All right. So without further ado, let's begin today's session. Right. Let's begin today's session. I will need to go over to the charts over here. So we got the charts over here. Hey Yaya, right? Thank you very much. All right. Thank you very much for your well wishes. All right. I think I shall move myself to the bottom left corner here. Right. So it's a little bit. I shall move myself to the bottom right corner. Bottom left corner. Right. At the bottom right corner, I'm blocked by the IC Markets the thing, as in the watermark. Okay, now let's begin today's session. Just give me a second. How do I flip it? Okay, you guys can see me clearly, yeah? All right, okay, let's begin. To celebrity matchmaker, what time zone are you using? I am in the Singapore time zone. So GMT plus 8. All right. Oh my goodness, I can't. All right. Yeah. So GMT plus 8 in the time zone that we're using, for this, right? I think it's. I have it here somewhere. I thought they usually put the time zone over here. I think TradingView automatically formats it, right? I think TradingView automatically formats it, right? Let me just check, right? Because if we're on the 1 hour chart, the markets haven't opened yet, right? Yeah, I think it's. We'll know in a second. All right, Friday, January 24th, 8 p.m. Oh yeah, sorry. The thing was hidden by this thing down here, right? UTC time zone. The time zone for the charts is the UTC time zone. Okay, guys. Now let's begin today's session, right? Fabio, nice to see you tune in, right? Luca's asking, first time here, which strategy do you follow, right? I wouldn't say I follow a strategy, right? Like a well-known strategy, but you guys can analyze the way that I analyze the charts, right? It's usually a mixture of we have the supply and resistance, right? The key graphical levels, right? We use a lot of correlation, right? We know how like euro dollar, DXY, Dollar-Franc, right, move in opposite directions, as in like are strongly correlated, whether positively or negatively. We use momentum, right? We use a lot of Fibonacci, right? So in some sense, Fibonacci retracements, extensions, expansions, and projections. A little bit of Elliott wave. Do use quite a bit of oscillators, right? If you guys are familiar with that, right? But mainly for the divergence and the hidden levels of support and resistance, right? But yeah, don't use that much price action. I don't use that much price action, right? I don't use that many trend lines, right? Our trend lines are just to gauge, right? I don't really use trend lines as trading signal, right? Because I feel like it's too subjective, right? if you have 2 points that line up, you know, on a different broker's price feed, right, the lines can just be drawn very, very differently, right? So I don't use trend lines as a confirmation tool. I use it more as a momentum gauge of momentum, right? Yeah, so I am GMT plus 8 here in Singapore, but the charts that you're seeing is the UTC time, right? You can always see the trading view charts at the bottom right, UTC time, all right? Okay, cool. Overlap zones are best for you. Yep, I love overlap zones too, right? I use them a lot, right? Overlaps and the pullbacks. So if you are wondering, I guess this would be a perfect time to let you guys know. If you are wondering, like, where's the list of everything that you can go and learn, right? This playlist over here, I mean, I do cover them. Oh wait, oh, this has to be a new playlist, right? Let me see if there's an old playlist that we have. Oh no, we don't have our old playlist anymore. But yeah, my team over here, my team does cover quite a number of the new ones, right? Quite a number of the new ones. Peggy, who you see over here, is particularly good with Fibonacci, so go check it out, right? Go check it out, right? You should be able to learn quite a bit of the approaches we take to trading over here. I think she's an 11-time prop firm trader, right? And so definitely someone worth listening to for trading. All right, so let's begin today's session, right? Bitcoin, let's begin Bitcoin. I'm going to remove everything, right? It seems like it held nicely below our resistance, right? And we will analyze the charts, right? So for Bitcoin, right, starting off Bitcoin, just zooming out, right? You notice that on the daily time frame, it is a little bit hard for me to so yes, Ketan should be covering the fundamentals later today, right? So I'm usually covering the technicals early in the day, right? Then Ketan covers the fundamentals later in the day, right? So I'll let him know that you're a fan of his work, right? Yeah, so Ketan brings a good balance of fundamentals to our technicals, okay? Oh, we got Forexer here too. Welcome. Right, nice to see the whole team here. Okay, so yeah, you notice that the approach on the daily time frame, we might not be able to see any values on the left, right? Even when we try to zoom out further and further, right? And it becomes very small, as you can see. So whenever you notice that your trading view chart gets a little bit too small, like this, is a signal that you should actually go into the one time frame higher, right? So now we go into 1 week time frame, and you notice that it's a lot clearer this way, right? It's a lot clearer. Okay, now what I would then do is I will look for the key levels. My theory is that you should look for the levels where the wicks don't, where it's mainly the wicks, the candle wicks, which are overlapping, right? Look at this. We got a nice bit of resistance over here, right? A nice bit of first resistance here. And why do I pick this level? If you look at very clearly, I'm picking a level, right? It might look random, right? Some people will pick a level over here, right? But what I like to do is I like to drag it as far back as possible and try to pick a level where it's mainly the wicks of the candles which are cutting, right? And this is what we call an overlap resistance. Okay, nice overlap resistance right about there, and we can see price is pretty close to it. So the very basic, simple to understand theory is that if price is below resistance, naturally we are looking for we are bearish on the move, right? Now how bearish are we on that move depends on how many elements line up there, right? If you can just liken it to like, you know, a simple stick. You know, you got one stick over there, right? It's it'll easily be broken, right? But if you got many sticks, you know, that you pick up on the floor, you put them together, you get a very strong area of resistance, right? So how we decide whether we are going to be bearish or we're waiting for a breakout to happen really depends on a couple of these things. And I would like you guys to take this moment to really run through my thought process, because It's not only about taking the trades, it's not only looking at the analysis, but the thought process that goes into the analysis. Okay, we got a request for Aussie Cat already. Happy New Year to you too, Sophia. All right, so big resistance there. Next thing I like to do a Fibonacci retracement, right? Bottom to the top. And I see, top to bottom rather, and I have like all fibs over here. So I know if this Fibonacci is lining up closely to anywhere. And I know notice that this 61.8% is just slightly above my first resistance. So what I then do, right? Remember guys, the moment you look at this, right? This is the starting point here. Let me see if I can use my mouse. This is the starting point here. It goes all the way down to my ending point. The moment it breaks the 23%, right, this Fibonacci is not valid anymore. Okay, the moment it breaks the 38%, it's not valid anymore, and the moment it breaks the 50%, it is not valid anymore. Okay, right, simple rule of thumb. Right, that means just from this alone, just from this Fibonacci retracement alone, 23, 38, and 50% are all broken already. Right, so I would come into here, right, and I would actually come in here and select. I have all the different Fibonacci retracements that are safe, and going to pick only 61%. Now, the reason I do this is because it's important for you to have a clear drawing. The clearer your chart drawings are, the less mess there is, the better your frame of mind is when it comes to analysis, right? Advocate, right? You must be one of the OGs around here asking when Bob is coming back, right? It's a code name for Cass, right? Bob has, I think, she's now a mother, right? I think she had her maternity leave. Our past, her maternity leave has more or less ended. She's moved on, right? I think she does guest appearances, right? Yeah, she's probably restricted to guest appearances now, right? But yeah, she's a new mom, right? So there's a whole bunch of what's the word for it, duties that come with that. So she won't be back for a while, unless it's like a guest appearance, but I will pass your message over to her. Right. We got a question: is it very necessary to use TradingView as a trader? Right. I don't use I wouldn't say that you need. Okay, TradingView is just a way of showing the charts, right? You can just as easily use MetaTrader. You can just as easily use any of the other charting platforms out there, but TradingView is just handy when it comes to the smoothness of the charts and the analysis, right? The drawing tools that they have. There are some drawing tools out there that have Fibonacci calculated wrongly, right? But TradingView has it done well, so that's why we're using it just for charting. Okay. Question from Roy is that could you tell me where to find your drawing tools? Okay. So people are asking where to find my drawing tools like this first resistance here. It is actually, right, like for example, first resistance, second resistance, they are actually just horizontal lines, right? What I do is I double click them, right? And I just type in like, this, for example, this is Roy Layfield, right? And then I just save the template. I just save the template as like Roy Layfield, right? I just change the colors, change the numbers, change whether it appears on top or whether it appears below, right? It's actually just a line, right? I just label it in advance so that you guys are able to see it clearly, all right? Techno Tom is asking, which extension should I use? 1.4. Okay, extensions that I use. All right, let me explain this part, right? So for anyone who is wondering what Tom is asking, right? He's asking which extensions he should use up here, right? Oh man, what's wrong with my drawing? Which extensions he should use? Let me tell you, 127 is a key Fibonacci extension that I use, right? These levels in between 138, 141, and 145, they are more for stop loss placements, right? But we usually use 127, and then we use 161.8. right? If needed, we can add in 145. If needed, we can add in, if needed, we can add in 141.4, right? But usually I only use these two. I use 127 and 161.8. My approach when I'm trading the Nike tick, for those of you guys who know the Nike tick strategy, is that I would take a reversal of the 127% with the stop loss at usually the 141 or the 145, right? I think there's a strategy, I covered this in the past, right? A very, very effective strategy, right? Using Fibonacci confluence, right? With the main guiding Fibonacci being the Fibonacci extension, right? I hope that answers your question, right? But the main one to play reversals of are usually 127. You usually can't play 161.8 because that requires price to go up in a very straight movement all the way to 161.8. Okay, but all right, let's go back to today's analysis, right? First resistance I've highlighted over here, right? First resistance over here with a Fibonacci retracement from here down to here, and I would just select 61.8, right, as the key Fibonacci retracement. And since it is close enough to price, what I like to do, I like to highlight a little area over there. Okay, no worries, Tom, right? Oh, we got Tijani here too. Welcome, Tijani. Nice to see you here, right? Okay, no worries, Roy. Built-in tools on MT4. Yes, they actually do. They are a little bit harder to use on MT4, right? But you can arrive at the same conclusions as TradingView. It's just a charting platform, right? It's just a charting platform, okay? Right. Now, so we got big resistance on Bitcoin, right? So once I've established this on the higher time frame, then I can go in down to the smaller time frame. So I know, right, that just where price is right now, there's very limited upside, right? There's very limited upside for it to travel up here, right? So I wouldn't be super bullish because there's very, very limited upside. At the same time, it is worth noting that I like to try on the Ichimoku cloud. You look at it, very strong bullish strength, right? Very strong bullish momentum that is pushing prices up. Okay, so it'll be a bit foolish for us to call for prices to make a reversal. In this kind of situations, right? In this kind of situations, what we try to look for is what we call a downside confirmation, right? So a nice bit of, if you're looking at the support levels, we got one support level over here. But I would say, looking at how price action is, man, it's whack, man. I would probably wait for prices to make a reversal off here, right? If it does make a reversal off here, right, this should be the first downside confirmation, meaning that we need to wait for this level to be broken. It seems like there's a fair bit of levels over there, so I'll probably wait for this to be broken and at most play the move down to a first support. I wouldn't play the move beyond that. Okay, yeah, I wouldn't play the move beyond that. A bit risky, right? Because look at this, right? The Bitcoin has just been recovering quite well, but this view I have, right, will still need to be adjusted based on our view on Ethereum, right? So we a couple of weeks ago, right, we had we established the support and resistance levels of Ethereum, right? I think it was on the 18th of December, right? And since then, right, you can see that the support and resistance lines have been holding very nicely, right? Very nice overlap resistance, as you can see. Very nice overlap resistance, as you can see over here, right? Look at how price touches this level very nicely, reacts off this level very nicely, right? And of course, when we zoom into here, we can see that price is respecting this level very nicely. And that's the important thing of identifying a key support level, right? I identified this level probably on the 18th of December. And you can see that since then, right? Since then, price has been fluctuating between my support and my resistance levels. Okay, so the key view, I guess, let me see. The key view for Ethereum, right, can tell there's a fair bit of consolidation over here. I would wait for the first support to be broken to trigger any downside move, right? You can't play the move. You can't play the move on Ethereum without level being broken, right? It requires a confirmation, right? There are some charts where we don't need the confirmation, but for Ethereum now, I would say we need that little bit of a confirmation to trigger the move down. Okay, all right, at least that's what it looks like. All right, so the view on both Bitcoin and Ethereum is that bearish, but it requires a little bit of confirmation. Ethereum requires price to break the first support level. We would be foolish to say that price would just, we can play the short from here right now. You know, it'd be foolish to think that we can sell from now, because this support level is so strong. So if you think about it, right, how do you you know, you can't sell now. You need to wait for price to break this support level, and you should be pretty confident if it breaks the support level that price will come down to the second support. Okay, now question, how to use the Fibonacci level. I did cover a topic here on trading on IC markets on how to use the Fibonacci retracements, extensions, expansions, and projections previously, right? So go and check, go try to find a video, right? I will cover XAU USD, not necessarily XAU GBP, but it's the same view on gold, all right? But before that, let's begin with our view on DXY, the dollar index, right? We highlighted nice resistance level there, right? Now, bounce off the support level, okay, worked out quite nicely. Now, what do we expect this week? I do notice, right, nice bit of channel resistance. Not the best channel resistance actually, right? Yeah, we got a bit of a bearish channel over here, right? I'm not too keen about the exact levels of the bearish channel, because it can change very easily, but it's worth highlighting that, you know, there is clearly some sort of a bearish momentum that is pushing prices down, right? So bearish momentum, price is making lower highs, as you can see over here. Price is making lower highs, so that's one of the key things. It's already making lower highs. That means by that technical definition, we're seeing bearishness, right? Now, the next thing I want to highlight is this level over here. This is what we call the overlap resistance, right? Price has made a pullback to this level and is now testing this level. I suspect it could line up with a 38%, maybe? I don't know, I can't really tell. It's not really 23%. 38% is where it actually reacted off. A bit of 50, a bit of 61.8%. Okay, what I suspect might happen. What I suspect might happen is that, well, in this case, right, it's worth noting that price, nice bit of price action over here, right? So it looks like price really tried to shoot up, failed to do so. Let me check the Ichimoku cloud, right? Still a little bit of bearishness there. I need my RSI. Yeah, RSI is telling me crap. Right? It's nothing on the RSI. All right. Potentially, we could see a reversal down to the recent low, right? Potentially. So that will be the first support, right? And in terms of like this stop loss level, if you're thinking of a stop loss level, we could keep it above this little spike, right? Above the 38%. You want to be a little bit safer, you can put it somewhere about here, right? That's where the whole breakout actually happened, although it's not that nice a level, right? You can put it over here if you want a little bit more breathing space. But I do think, right, I do think we got a decent chance of price making a push down, rather, making a bit of a push down towards our first support, right? Pretty nice movement there, okay? So if we are bearish, right, Mando, nice to see you tuning in again, man. I'm doing well, thanks for asking, right? H4 reacts well, 50% H4 reacts well. Okay, thanks for the heads up, Fabio, right? right? If you're bearish on DXY, it means that we should technically be bullish on euro dollar, right? You could argue to a certain extent that there might be a bit of can't really tell. There might be a bit of a bullish channel over there, right? Not that great a bullish channel though. I don't rate it that much, right? But there's a little bit of a bullish channel over here, right? So we could be seeing prices bounce. The only problem with euro dollar is that there is no clear support level. There's one clear support level over here, right? There's one clear support level over here. But look at it, that you can't exactly identify any other support levels. In such a situation, right, that's where you can use a bit of Fibonacci, right? And the Fibonacci projection, which I'm going to show you, uses 3 points. It uses the starting point. It looks for something like a letter Z. It looks for a middle point and looks for the ending point. And it projects it downwards to find a support level. Okay, so that is a Fibonacci projection. To use that, you use this little tool here. They call it Fib extension, but I think TradingView might have called it wrongly. Right, 2 and 3. Right, we could have you can see price testing the 78% and the 100% projection. Okay, that is one level. Then we do a Fibonacci retracement from here all the way to here. We notice that price is bouncing off the 61.8% quite nicely, right? So if we don't have a better level, right, we could actually put this as a little bit of a confluence level, right? I don't really like the level that much, but if we have to, right, we could look at this for a bounce, right? For a bit of a bounce to play the move up to here. I'm not too confident of this move though, personally for me, right? Not too confident because the levels, I'm basing this purely off a Fib confluence level, 78% and 61% lining up. Of course, we have a ascending channel support level, but I don't really like ascending channel supports, right? Because it's very subjective. It can be changed very easily. Okay, I got a request for pound yen. I'll look at it later. Okay, so yeah, it's not too keen, not too confident on this. For those of you guys who are a little bit riskier, right, you can put your stop loss, right? I might consider a stop loss about below the 100% projection, maybe about here. But if you want a little bit of breathing space, you can put it over here, right? You still got a pretty decent 1-to-1 kind of, or maybe 1 to 1.5 risk to reward. On the H4, it's on a solid level. Yeah, you think so? Yeah, it could be. It could look like it's forming a little bit of a double bottom too. Okay, but we're looking at the 1-day time frame here because we need this analysis to last for the week. All right. Okay, US oil, I got it. Okay. There was a request. Wait, just let me confirm a few things. All right. This could be the trade of the day. Very nice on Dollar-Franc. Price right under 23%. This could be the trade of the day, I guess. Tijani, for the smaller time frame analysis, you can tune into our session later today. I think it's 12 or 13 hours from now. We're doing another session for more more time sensitive analysis, right? The pre-market analysis is to view what's going to happen for this week. So I usually set the tone on what's going to happen for the rest of the week, right? Then the rest of the team goes in on our daily analysis that we do on IC markets. We usually look at the 4-hour charts, right? But today's analysis on the 1-day time frame, right? So that we can establish the higher time frame view, right? By itself is actually a very I mainly trade the higher time frames, right? Because I have less time to trade now. But it is very effective because it tends to be a little bit more immune to the day-to-day news announcements, like the non-farm payroll, crazy news, but on the On the 1 day time frame, it just looks like a a small little chart, a small little candle. Okay, so we got bearishness here, right? We got bearishness on Dollar-Franc. Looks very nice, right? Ichimoku also pushing prices down. What I would like to see, look at price making a very nice pullback to this pullback resistance, as you can see over here. Very nice pullback, right? So we could be seeing prices make a drop, right, to the recent low. If you don't want to be too risky, you can play it up to maybe here, right? Don't need to play it too far away. Okay, this should be enough for a profit target, right? In terms of stop loss, if you personally, for this kind of moves, right, my stop loss tends to be very, very tight. But if you want a little bit of breathing space, you can put your the second resistance can be over here, right? I do think you might be able to find 100% projection there. Very nice. We have 100% Fibonacci projection that lines up over here too. Wow, this is actually a pretty good trade. If only price comes back up to here again, you could get into another position, right? But personally for me, I think this has to be the candidate for one of the trades of the week, right? I like that DXY and Dollar-Franc are very positively correlated. So if DXY is dropping, we should expect Dollar-Franc to drop too, right? And we should expect Euro-Dollar to bounce, right? So it looks like we have a pretty correlated market forecast over here. The markets are in tandem, right? Meaning that it does, what I worry about is if DXY is dropping, but it looks like Dollar-Franc is making a bullish breakout, right? Then something's a little bit wrong, right? But if they are all singing from the same tune, hymn sheet, right? It looks like the correlated movements are correct so far. Okay. By your examples, you must be intraday trader. To answer your question, right, I'm more of a swing trader, right? Tend to hold my positions more than a day. So technical definition of a swing trader is that you hold your trades a little bit longer than a day, right? Intraday trader would suggest that you're holding like you're a day trader. You close your trades within the day. Sometimes I do that, right? Sometimes I do that, sometimes within the day, but usually more than a day, right? I usually hold the trades for a couple of days because I'm a slightly higher, longer term trader. Okay. The 0.83 reaction was the 127 extension, right? Was it? Let's see the reverse Nike tick over here. For those of you guys who wonder about the 127, look at that, right? 127% right here. Very, very nice. Very good spot, Fabio, right? This is the reverse Nike tick that we're looking at, right? It comes all the way down. It comes all the way down and it touches the 127% Fibonacci projection and it bounces back up again to your 100% level, right? So this is my bread and butter trade. Very simple. Usually on the higher time frames, it tends to work a little bit better, although it takes a long time to play out. But it's a very nice trade that you can just take. It's my bread and butter trade, right? So give me a moment. Let me just delete the brushes. Good spot. It's a good spot. And I guess was it Tommy that asked the question about the Fibonacci levels, right? This is an example of the 127% Fibonacci extension. You taking the trade on the 127 with your stop loss at maybe the 138, just to give yourself that breathing space. Okay. Now, right. Okay. Do I use MACD? I don't use MACD that much. Some of my traders use MACD, but I don't use MACD that much, right? I use one of the oscillators, either RSI, stochastic, or MACD, right? They are technically all oscillators, right? So you don't want to create too heavy a reliance on too many oscillators, right? You either use one of them, right? Of course, they're going to tell you if it's overbought or oversold, right? The only difference is maybe MACD does have a few different ways of interpreting it, right? But for contrarian style of trading, meaning that you're playing the reversals, right? MACD, I think stochastic and RSI tends to work a little bit better, especially if you can find the bearish and the bullish divergence levels. Okay. So Techno Tom is asking, how do you choose the strongest currency to benefit from DXY weakness, right? So DXY weakness means USD weakness, right? USD weakness could mean Euro dollar going up, pound dollar going up, Dollar-Franc. So I think my FX book might have one. Forex correlation, right? You can check it out over here. So we're looking for a correlation above 80, right? We're looking for a nope, I'm not gonna disable my ad blocker. All right, I'm going to look for a correlation above 80, and my time frame I'm looking a bit above 1 week. Looks like the correlation indicator is not working yet. Oh, the correlation table is not working. Must I disable my ad blocker on this? Okay, let me just disable it once. Let me see if it works. No, it's still not giving me the correlation. Okay, you can find a correlation table, right? You can find a correlation table, right? And usually, for example, on TradingView, it has this thing where we have the this thing called the correlation coefficient, right? So in this case, if we use DXY over here, the dollar index, right? We can see the, let me just close this off. You notice that for the dollar index, most of the time the value is close to 1, right? The value is close to 1 means that, let me just show you, if I load DXY, the value is at 1, means that it's perfectly correlated, because DXY and DXY, they're the same instrument, right? Obviously they're going to move together, right? But DXY and dollar yen, right? You notice that the correlation tends to be 1, but it tends to, it can go all the way down sometimes, right? So I would say that this is not a very strong positive correlation. Okay, you look at Dollar-Franc. Dollar-Franc tends to have a pretty strong positive correlation with DXY. So that means that if DXY is dropping, there's a high chance that Dollar-Franc would also drop, right? Then we have, on the flip side, we have Euro dollar, right, which tends to be almost a pure negative correlation, right, which is good because it's strong negative. We want something which is strong positive or strong negative, right? Because as long as it's strong positive or negative, you can draw that relationship together, meaning that if dollar, in this case, if DXY goes down, Euro dollar should be going up because of the strong negative correlation, right? So if we are expecting DXY to drop, like we are, and we notice that Euro dollar is on a support, that means Euro dollar is going to bounce. It means that the correlation is working properly. Okay, so that is how you use it. You need to look the currency correlation, right, to get a gauge on how which instruments have better correlation. Okay, right. Chris mentions that the sound is no longer working, right? Okay, glad it's working. Okay, Abdul is asking, how can you find trades that can hold longer than 1 day, right? The simple approach to that is to use use the 4-hour chart or the 1 day chart, right? Meaning you look at the 4-hour time frame up here, or you look at the 1 day time frame to do your analysis, right? That is how you define how time sensitive your trades are, right? If you're looking at the 5-minute chart, right, you're naturally going to look for trades that exist within the day itself, right? But if you look at the 1 day time frame, it takes a lot longer for the trade to play itself out. That is where you can hold trades for longer, right? So the key thing that decides how long your trade is going to last is your time frame that you're analyzing the chart with. In this case, right, well, analyzing the 1 day time frame, right? Do you think price will go from here to here within a day? Unlikely, right? It's more likely that it will take a few days to reach there, right? And just because of that, it becomes a long-term trading strategy. Okay, now I would jump through a few key ones, right? We'll take a look at gold first, right? Take a look at gold because we don't have much time, right? Take a look at gold. Big kind of resistance level over there. Seems like price is really testing it and seeing if it can break above that level, right? Nice, really nice bit of resistance over there, right? In terms of support, not many levels, right? I can't really find a nice support level, right? This is a bad excuse of a support because of the way that price broke through this thing. Although I do like a little bit of the price movements over here, which is why I don't mind. You look at this, you know, it looks like price cuts through the wicks very nicely over here, right? So I would consider this as the first support. I would consider this as the first resistance. And guys, it's hard for me to call a move on this, right? Well, this resistance actually goes all the way back to here. We got a resistance that goes back to there. So it's important to see how far back a resistance level goes, right? Clearly, this level has not been broken, right? You could even stretch this resistance further back to here, right? You could even stretch this resistance further back to there, and this is the benefit of using higher time frame, right? If you were on the 4-hour chart, right? If you're on the 4-hour chart, you look at the resistance over here, right? And you think, okay, you know, price might break that resistance level. If you go onto the 1-day time frame, you're like, oh, okay, you know, it's actually a pretty big resistance level. And you go into 1-week time frame, you zoom back and like, whoa, man, last time price tested this level, right, was on August 2020, right? The last time it broke this level was never, right? So it's super unlikely that price is going to just easily stroll past this resistance and break that resistance, right? So you can understand the thought process here, why it's important to reference the higher time frame. Most of the people who look at this, they're like, okay, it's a resistance level, but they don't realize that it's an all-time high resistance level. Last time price has even tested that level was 20th of August, right? So you know, it's a big level. I would think that we might see price, right, make a reversal back down to the first support here. Okay, it is probably we could see that, but I don't have the confidence to call price breaking above the first resistance. Don't really have the confidence for that, right? I'll probably be looking more at a reversal. Okay, we got WTI, a request for crude oil, right? Let me just clear up the charts a bit. Crude oil is a little bit hard for us to analyze, but I'm guessing, could we be, so I usually, a channel is basically just parallel trend lines, okay? So we are seeing a bit of a bearish channel, as you can see over here, bit of a bearish channel, right? Let me highlight the key levels. Very nice resistance level over here, very nice support level over here. Okay, so that's what I like to do. I like to establish the key resistance levels and the key support levels first. All right, now that that is established, I'm looking at this thing in between. I can't call the move, right? There is a very nice bearish channel, pretty nice bearish Ichimoku cloud momentum too, right? But it's hard for us to call any move, right? Because the price action is very choppy around here, right? At most you could almost squeeze out a level. No, I can't. A bit tough, right? But if I have to play a trade here, there's a decent chance that price might start to continue to inch down towards the first support, right? But none of these levels, this is a dotted line for me, because none of these levels is clear enough to form a key resistance level, right? To deserve the title of a resistance level. This is more like an intermediate resistance. Can't really find a level on it, but because of the bearish momentum that we have, right, because of the trend line, you know, we might see price kind of inch down there. Not very confident on this move. Okay, so not very confident. We had a request, right, from from Abdul to look at pound yen, right? It has held very nicely below our resistance level and our support levels, right? So pound yen quite nice, right? Held very nicely above our support levels. We've got a nice bit of resistance level here where price is holding quite nicely, And if anything, we could probably see prices fluctuate between this resistance level and this support level. Okay, so this was the view on pound yen 2 weeks ago, 3 weeks ago, 3 weeks ago, right? And it hasn't changed since then, right? So the value of a good analysis, right? So this is pound yen, okay? Not much has changed since then. We do need to look at S&P 500. Okay, one of the key things that I might want to highlight for S&P 500, very nice pullback level that we could be looking at. Wait, just let me see what's happening on Dow Jones. This trade worked out, what I'm seeing on the S&P 500 is that there is a risk of a double top, right? Because if this, I'll put this as a downside confirmation, right? If price closes below this, right, we could be seeing a little bit of something like a double top kind of movement. A double top kind of movement that could lead prices down to here, but we need prices to break this downside confirmation, close below this downside confirmation to trigger the move down. Okay, and of course, pretty simple risk to reward. You can put usually my stop loss placement, I will put it somewhere here, but for the trade, and since you're highlighting levels, right, we can put the first resistance up there. Stop loss, it depends on how tight you want to put it, but if it's really a double top, it can be, you can have quite a tight stop loss. Okay, the only thing is that it's not breaking the 23% retracement for me, so I don't really like that much. Right. Yes, Technotom. Right, Technotom is asking, should we combine different Fibonacci levels? Yes, that is the concept of Fibonacci confluence. You should combine extensions with retracements, with projections, and even expansions, right? The more you can combine them together, the better it is, but try to combine with a bit of support and resistance levels too, if you can. Okay, so I hope that clarifies that point for you, right? So you can play the downside confirmation here on the US 500, which means Dow Jones not much change, right? Still, the DJ30 still seems to be in the middle of nowhere. But very interestingly, you notice that the 161.8 extension, this is a 161.8 extension, right? You notice that price reacted off this level and is coming back down. Okay, the only thing with 161.8 extension is unlikely that the 161 will come back all the way down to the 100% level, right? 161.8, you usually can play it to the next support level. Like in this case, we have another support level to play the 161 or if there's no other support level, you can try to play it down to the 23% retracement. Okay, dollar yen, right? Oh shucks, did I not look at dollar yen? All right, I'll take a quick look at dollar yen. Dollar yen, big resistance there. Oh, it's hard to analyze dollar yen. I'm thinking that it could be a bit of a double bottom over here. All right, it could be a bit of a double bottom. Not the best one, but how does this look on the higher time frame? Yeah, if I could think that, right, if price is able to hold above, close above this upside confirmation level here, right, we could see a little bit of a recovery. Okay, you could argue that this is the overlap, right? Not the best level, but if it closes above this, right, this bottomish pattern that you can see over here could push prices. It could push prices all the way up to here. Here. Right, I don't think you go all the way up to there, but yeah, we could see price. We probably need to wait for price to close above this upside confirmation to trigger the move up to there, right? And this probably is in line with yep. Nope, not in line with any Fibonacci. If someone is forcing you to trade dollar yen, then trade it. If not, right, if you have the chance not to trade dollar yen, right, I probably won't trade it. It's not that clear compared to Dollar-Franc. Dollar-Franc, you got 23% retracement, you got 100% Fibonacci projection, you got nice pullback resistance, you got nice descending trend line, you got a nice Ichimoku cloud bearish momentum. Yes, Dollar-Franc is a nice trade, right? Dollar yen is not a nice trade, right? I'm kind of clutching at straws here. So remember, when it comes to trading, it's about knowing what not to trade, right? No one will ever force you, say that, you know, to be a profitable trader, you must trade euro dollar. To be a profitable trader, you need to trade pound dollar, right? No one will ever force you to do that. The key thing is that one of the benefits of Forex is that there are so many instruments you can trade, right? So look for the one that has the nicest setup, right? And then hone in on that one, right? Don't try to force yourself to take a trade on a setup that doesn't look good. So between euro dollar, DXY, and Dollar-Franc, I'm going to take Dollar-Franc. It looks the nicest, right? And between Bitcoin and Ethereum, right, I'll probably take the trade on Ethereum, right, for the bearish breakout because the moves are clearer, right? So that's the very, very important thing, right? Can order blocks be found on the 1 minute time frame? Well, the strict definition of order blocks is that it's a block of orders that I think you can find on some brokerage platforms. I think you can, right? Probably on every time frame you should be able to find it, right? Not too familiar with that, right? I looking at are you referring to dollar yen? I wouldn't say it's a head and shoulders. Doesn't look like a head and shoulders pattern. Oh, if you're talking about this like a head and shoulders, right? If you're talking about like this as a head and shoulders pattern, maybe a little bit a topish pattern, whether it's a head and shoulders or head and shoulders, knees and toes, right? I'm not sure, right? But definitely a topish pattern that happened over there. Not too confident of a bigger move. Like, remember that when you are drawing chart patterns, okay, I'm probably going to end on this point over here, is that if you're looking at like a shoulder, head, and a shoulder, right, this person should ideally have a body that is like this long, right? And then he has his feet over here, right? He gets his feet, right? And then he got his legs over here, right? You know how to draw his legs, right? You got his legs over here, okay, right? So the preceding move of a head and shoulders pattern is that you do need to have a big enough preceding move over here. Don't look for a head and shoulders pattern over here, right? And then you have a body that is this long, right? That is not going to work, right? So you're looking for like a head and shoulders pattern over here, right? That means that you need a super big body over here, right? So remember, that's the important thing to take note of, right? Head and shoulders is fine, but the proportion of a human body to that head and shoulders needs to be in line, needs to make sense. Okay, I hope you found that explanation kind of helpful. Okay, now that's it for me. That's all the time we have today, right? Thank you for staying throughout this entire session. If you found it useful, help me smash that thumbs up button, right? Right, yes, Italy made me a good painter, thank you. Right, like Picasso, yeah, right. Help me smash that thumbs up button if you found this session useful. you can leave your comments, right, on if you found this session useful too. I think IC Markets is doing a session where they are compiling these comments to use in like their social media. So yeah, if you find it useful and like to leave comments even when this webinar has ended, feel free to leave it, right? And feel free to smash the thumbs up button if you found it useful. Thank you for tuning in to the first pre-market session, right? Lot of chatter, I love it, right? Thanks. Keep the conversation going. I love it when there's people I can talk to. All right. Thank you. I want to say Leandro. I say thank you. All right. Thank you, Leandro. All right. Thank you, Tom. Thank you, Moss, Nick, Rick. Right. Abdul, Yamilu. Right. Not sure who celebrity matchmaker is. Right. We got Chris. We got Advocate. Right, and the rest of you guys, thank you for hanging out with me today. Right, gonna get some shut eye. Right, 4 to 5 a.m. here. Right, so I'll catch you guys. Tune in to our session later today if you want to. Right, I will just paste the link here for you guys. Right, but we have, if I'm not wrong, should be Ketan, who will be covering the fundamentals in about 12.5 hours. Is it 12.5? Let me find it first. I 7 January. I need to find the one by 8 January. Is Emily, right? Is Emily later today, right? One of the new analysts I have on my team, right? So you can check it out, right? She should be covering the lower time frame, right? Yeah, she should be covering the lower time frame. She just passed a prop trading test, right? Not bad. I think it's like just 3 months here, right? She passed a prop trading test, right? Very nice approach to trading, right? So go check it out, right? Tuning in 12 hours. Okay, thank you very much. Stay safe, trade safe. Peace out, guys. Thank you very much. Bye-bye.